Welcome everybody to this evening's ACY Securities webinar, live Forex market review. Before we get into it, if you can read through the disclaimer, if you're on our live stream on YouTube, then I can't see the chat, but you're more than welcome to watch, or just use the link and come into our webinar room. So I'll just read through the risk disclaimer for me. Any questions, just type into the chat box, the question box. I've got both open. All right, let's move along. If you don't know me, or you do know me, but if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities and full-time trader. I've been trading the Forex market now for more than 15 years, mentoring clients for more than 10. If you want to contact me, my email is on screen there, duncan.cooper@acy.com. And you can connect with me at the ACY website on the Market News tab at the ACY Securities YouTube channel, or you can connect with me on Twitter and LinkedIn. And my Twitter and LinkedIn kind of connect all the way back to those pages anyway, but more than welcome to connect. As well, our Telegram channel through the week, I'm posting analysis in there. Want to get access to that, just email Nathan Bray, or access to the chart layouts and templates that I'm using MT4, then just email him too. I'll put his details in the chat now. And if you want to get access to our Inner Circle webinar on Monday, then that's open to account holders. Just contact Nathan and he's in charge of who can and can't come along. He usually invites about 4 or 5 people. So we can't have like 50 people, but and you get the opportunity to talk to me. Talk to me about your trading. You can ask me anything you like about trading. So that's coming up next Monday. Usually do that once a month, usually at the start of the month. All right, Nathan's details are in the chat there if you want to contact him for anything. All right, so the whole market for the whole week probably has been waiting for the CPI data that's coming out. So let's just review the news items coming out. First, look at the inflation of the US into the new year. So this is at forexfracture.com, 11:30 p.m. Queensland time. So expecting that CPI month on month may just tick down 0.1. Or actually 0.2, because that would be a minus. Expecting that inflation will drop from 7.1 to 6.5. But they're expecting core CPI to actually uptick. So we'll just have to wait and see what comes out. I'm sure the market will go berserk once it comes out, unless it prints just like as. Then if there's a long distance from what they're expecting to what we get, then of course I'm sure the market will go berserk. So the market has been a bit of a holding pattern all week. The US dollar has just been declining fractionally all week. So compared to the US dollar, I've been a little bit of a bid over the last day or two. So let's have a look at the charts. Now, I'm not trading until past this event, but I'll take you through the trend and levels I'm watching. So let's start just with a look at the dollar index, and it is below this 103.82 level, which is potentially monthly support. This level here, just because we're a fraction above, just because we're a fraction below, it doesn't mean to say that support isn't going to come in there, but we are below it at the moment. And as we started trading through the new year, we had a weekly rally last week, started to look like support was coming in, but we are moving down to a fresh low on that weekly move down. So on the daily there, we had a start of an uptrend, higher top coming in, but then we've moved below. You see the last 2 trading days, it hasn't been doing much. And the S&P 500 has been going up. So on the day chart here, it is in an uptrend at the moment. All right, so I'm just going to start from the left and work through them. Now, I did post on the Aussie yen today. I was looking at the 9100 level to hold today to move up to the 72 level, but you can see here that it hasn't held. And I am though still watching this 92 level when the data comes out tonight. If we get a spike up, this range that I'm drawing in here is pretty much the range of last month. So I have been watching this level all week up here at approximately the 92 level, but we haven't quite got there. I'm just sitting in this support area at the moment. Got day support, weekly support, monthly support. So it's not the best area just to be sitting in, but have we already topped out? Or can we, in a perfect world for me, I would like to see this come up to here. And then, oops, got my wrong tool. Then see this move back down to come down and test this area. All right, now, market doesn't always give me what I want. We may have already failed fraction short there. We'll just have to wait and see what the data comes out. So if the data does pop it up, I'll be watching up there at the 92 level. The data comes out and it's negative for the Aussie yen. This will be down here. It'll drop 50 to 100 pips, I'm sure, instantaneously, and there's no way of getting in. So hopefully it has a rally up to a level that we'd expect maybe to hold. Now it could actually go up higher to 92.59, which is weekly resistance. So those are levels that I'm watching. Overall, I'm anticipating that we've had this movement down last month. All right. This is all corrective that we've been seeing. And we may have already topped there, but I'm looking for that kind of move up to 79 and then a turnaround. So you'll just have to monitor to see what happens. Aussie dollar. Let's have a look at the monthly chart first of all. We are still in a downtrend on the monthly, but the weekly and day trends are up. We're coming up. We're a little bit short of monthly resistance here at 69.67. So that's that low just here. Of this range, as I'm looking at the weekly trend has popped up now, but it's trading up inside that monthly range. And we're a little bit short of the 79 today. We've traded up to 79 level of the range. Is it topping out there? Is it going to continue up? So in the use event, we may pop up to that resistance level, monthly resistance at 69.67. We may obviously continue up and through to test up here at 71.36 over time. We'll just have to wait and see. So I'm looking at this as all corrective to top out to move down. It's not giving me a signal yet to do anything. I'm just looking at the monthly trend, assessing where a lower top could be coming in. Could be coming in at 79% retracement here. But we did start to break down to a lower bottom here, but then we've turned back to up. And at the moment, we're just sitting at this daily resistance level or support level at 68.93. We'll just actually pop back above there now, but just chopping around. Support is coming in at 68.93, that top at the moment. If the news comes out and it's negative for the pair, this will be obviously coming down to this area where we got support last week. So back to the day chart here. Support is coming in at 66.81 to 6,700. So if we get a significant sell-off, now we're only 200 pips away from that level. If we get a significant sell-off, we could be down to that level at some point tomorrow. The market will then have to decide, does it want to move through that level? So, I'd love to be able to say the market's going to come out negative, for example, and then we can just trade down from 69. But we won't be able to do that because the market will just move instantly. So if we get a bit of an uptick, what I'm doing at the moment is just watching the higher levels. If we come up to the 79% level, a little bit above and start to fail? Do we come up to this monthly level up here and start to fail? For me, it's too high up to be a buyer. And then do we start to see a movement down the range? Now, if we do drop after the news comes out, we're going to be probably down here somewhere. So then you can start to monitor. If the day chart still wants to hold its trend, there's a higher bottom there to a higher top. And look to the 62 level, 79% retracement area. And then see what the market wants to do. All right. So that's what I'm looking at there. I'm just looking at a couple of higher levels. I'm going to watch 69.67. What happens up there if we pop up? If we drop down, I'm not that fussed about being a buyer on this pair. I think we could top out up here at the 79% level. So then I don't want to try and trade it back up that way if we fall down. So those are the levels I'm watching and what price might do. Euro yen. Now this may have already topped out at weekly resistance here and daily resistance. It's almost like a double top. What we might find is that this could, when the news comes out, revisit the area. I put that in the Telegram today. And this is the area that we're obviously failing at or having a hard time at. So any more movement back up there, it's clearly telling you that area is a sell area. So after the news event's passed, do we see a retest of that area? May not retest, it may already be on its way down. But that's the area I'm watching. We may well, top of a range here at the moment. Bottom of the range down here. Okay, now put a fib in across that whole range, and after the market volatility is eased out over the next 24 hours from the news event, let me just put that to the low. What we might see how we're just drifting below the 79% level at the moment. We might drop when the news comes out, but then over the next 24 hours, 48 hours into early next week, we may come back up to the 79% level. That could offer you an opportunity to trade at 79, stop above the high for a move down. So these are the scenarios I'm planning out in my head. I don't know what the market will do once the CPI data comes out, and I don't want to be in until it's passed. I don't want to be holding a position and just get blown out the water. So yes, I'm looking at the high level up here. And then if that doesn't come to fruition, then I'm going to start to watch the 79% level. If price can have some form of rally if we drop. Okay. I don't want to be getting in this area of support through here. So I'll have to, always look and try to sell up high, not selling into support. Euro dollar, still maintaining a bid. I did think that maybe this was going to hold here when we had that small trading day there, but yesterday we managed to pop up. And next weekly level of resistance is up here. And we're just above the 62% of the weekly chart. That's the range for the whole year last year. We're just sitting at that 62 level. When we get to the pound dollar and the New Zealand dollar, you'll see that we have failed at the 62% retracement levels of the last year's trading range. So it is a notable level that we could fail at, but for whatever reason, the euro dollar has a bit more of a bid to it, to the US dollar than, say, for example, the pound dollar or the New Zealand dollar. So it is in an uptrend here. It's at a higher top area. Now, last week we were in a downtrend and then we swung up to a potential uptrend, but we could quite quickly swing all the way back down to a downtrend from the area we'll look at. It's likely telling me this looks so overstretched. Yeah, it does, but it's still heading up. So now it could top out here. this is a great level for it to top out at. It just needs to show its hand. So what does the data, if the data comes out today and it shows that inflation is still wanting to move up in the US, that means we're going to get a 75 base point rise for sure from the Fed, maybe for the next 2 months, maybe until they see, the dollar tick down. So that would obviously be negative for the euro US dollar, but we'll just have to wait and see. So it is at a very good level. This last few days may be a bit of a false break above this weekly top here, but we could stub into 78.70, but it's going to be difficult when the news comes out if there's a major reaction, because if it's negative for the pair, this is just going to drop, and then you can't go and sell it up at the top here because it's already going to move. So in all probability, if it drops, it'd be nice if then next week it can come back up for a retest up here. But whether or not it'll give us that, I don't know. So all I can tell you on that pair at the moment is it's at a nice level where the market could certainly top out at. And we might push through if it's slightly US dollar negative. We could push through this high over here at 107.87, go up to the 10800 level, start to fail up here. But at the moment, it is structurally in an uptrend. So if the news goes the way of the trend, we're just moving up higher at the moment. But there's no, if we do have a bit of a blip down, there's no close levels of support that you could reference to say, okay, price would hold at that level of support and then move back up. If there was a lower level, I do have this level drawn in from over there, 106.15. It could pop down to 106.15 to 10600, hold for a move back up, but we'll just have to wait and see what price brings over the next few days and how price starts to form structure. All right, pound yen, all week it has been sitting just where it is, just starting to fail at 79% retracement there on the daily. It's just testing support at the moment. Now that may be the pattern that's unfolding, failing at 79 to move down. So after the news, it might pop back up to the 79 level once more. Just drop it down to 4-hour chart. It might, it's been consolidatory. It's just breaking down a little bit. You could draw a fib in across this downward range at the moment. And, it might pop up to 79% of that small range, which overlaps with the larger 79% level. So price could and then move down. Just have to monitor what it wants to do. Unlikely going to get a small reaction. That's the unfortunate thing. But you never know what price might do. The print might come out exactly as anticipated. It might be a flat news event. We'll have to wait and see. So we might see a pop back up to retest that and then selling down in line with that bigger 79% retracement pattern. All right, so the pound dollar, if I go to the weekly, just to prove the point about what I was saying on the euro dollar, this is the 62% of last year's trading range for the pound. And we had a hefty sell-off from that level. And we haven't come back up. Like the euro dollar's come back up this week, all the way up to a new high. Pound dollar's not doing that. So I'm actually monitoring at the moment this range. We're failing at 62 level at the moment. It would be nice if it could pop up to 79, overlapping with this weekly top over here, 122.93. So can it move up? So if we go back to the weekly, really what I'm saying here is, can it come up, fail at that top? It'll form kind of a head and shoulder pattern if it can, and then form a lower top to move down. All right. That's what I'm monitoring for. Just have to wait and see what price does after the news. It could come up, and this 23.91 line is a monthly low over here, back in time. Could come up to re-challenge the high, hold and fail, or of course it could blow straight through, but I don't want to be buying at the top. So I'm just looking at levels where price could move up in the idea that we might be forming a lower top there on the weekly chart. All right, New Zealand yen. It's very similar to, get my right tool. All these yen pairs at the moment kind of showing this rally back up to a 79 level and starting to fail. Is that just going to follow down through? All right, you might see a bob back up, start to hold at the 79% level once more. From an intraday perspective, so I should really show that on the 4-hour chart. So on the 4-hour chart, does the news drive it back up, and then do you see a further failure at the 79 level for a move down? All right, all these yen pairs are moving down at the moment. While it's trading Aussie yen, it's trading down there at 90.60 at the moment, so that's just had a drop. It's just dropped like 20 pips while we're talking. All right, so maybe these yen pairs have already topped out. They're not going to give a rally, but you'll just have to watch what the news will bring. New Zealand dollar, very quiet the last 3 trading days. This is very similar to what I'm just discussing on the pound dollar. On the weekly, there's last year's range. Double top, false break at the 62% level of last year's range. We've kind of had a 62% movement up this way at the moment. Like I was saying on the pound dollar, I'm looking at this as a potential for a lower top to form on the weekly. If we draw a fib across the range, it's the same story as the pound dollar, holding at the 62 at the moment. So the news may stab this up. We may see a move back up to the weekly resistance level, 64.68, 79% level of the range as well. That would be a great level to watch for price to maybe hold out and turn around. So there are some levels that you can watch tonight after CPI data. Some pairs like the euro dollar is just in a nasty spot at the moment. There's no levels where I'm really liking to trade from, but like the New Zealand dollar there, that's a nice level. Just what does price do when the news comes out? All right, nothing much change on the dollar Canadian. When I spoke on Tuesday, I was discussing on the weekly chart here, we have a higher bottom, lower top. So this is all mixed in. Price is actually sitting right in the middle of the range of the higher bottom to the lower top. So for me, that pair at the moment, I don't know which way it's going to go. Is it going to go up or down? It's in the middle of the range. The weekly trend is kind of mixed, higher bottom, lower top. All right. The day trend is most definitely down. So what you could focus on is a day trend, draw a fib across the range, and look at this, what happens at the 62 to 79 if price pops up. All right. But I will look at a better pair at the moment. That pair is just mixed. All right, dollar yen. Now, can't establish an uptrend at the moment. It's been trying to establish an uptrend on the day chart from finding support at monthly support. Sorry, finding support at weekly support. So the weekly chart, first of all, reversal there last week. Now the news may drive this down to retest that level tonight. Could hold, we could break through. So what's that level to be support? Through the week, we had a higher top form last week, and it did start to move up to positive days here to try to form a higher bottom, but we're coming down to test that higher bottom right now. So we may well come down to test 130.40 when the news comes out. Or, that's the level to watch, is a false break of 130.40. We could obviously clearly just break straight down through there, but the market's going to have a very strong reaction one way or the other when it comes out. And the clear level to watch that we keep false breaking down there is at 130.40. So do we have another stab false break? Can you see then a setup to maybe trade back up? We've got the monthly low over here to the left, and I don't know who it was, maybe Newslav, and he's telling me now, actually, I'm just reading the chat, could be a left shoulder, head, right shoulder forming here. So the market may stub this down to the 79% level. Weekly support, monthly, the monthly low of last month is all down in this area here. So some pairs are looking technically quite nice, some aren't. This is looking quite technically nice down there. If we're to get down there and hold, then, you know, it's proved to be support here. Got a fraction short, false broke here to give you the potential inverted head. And can we form a right shoulder here? All right. So, and that pattern, if it does start to want to form, it would be starting then obviously to start to, if you go to the weekly chart. All right, let me just get rid of my fib because it's doesn't look great. You know, this could be a major double bottom. So what we might be starting to see is, you know, the head and shoulders, it looks clearer here on the 4-hour, left shoulder, head 4-hour. This head and shoulder pattern could be the confirmation that the double bottom may be starting to want to really hold. And if it is that kind of pattern, the double bottom on the weekly, there's plenty of time to get in. It's just a question of establishing what is going on down here. All right, because if it's going to be a true double bottom, we're going to be coming all the way back up maybe to the high of the year. So there's plenty of pips to negotiate up through here. So there should be plenty of time to get on board. All right, so I mean, it could stop down there tonight and you could be up watching. And if you start to see it reversing there, you can decide, you know, tonight that you want to engage. But there will still be plenty of time to engage if we're moving all the way back up to test last year's high, because there's about 2,000 pips, I think, to go. So don't have the fear of missing out today. It will be very volatile when the news comes out. If we're lucky, price will just, you know, retest a level that you're watching and play nicely, and it might offer you an opportunity, or you might have to wait 2 or 3 days for the price action to, you know, establish an entry for yourself. All right, let's have a look at gold. Now, yesterday we had a spinning top up there, monthly resistance. If you go to your monthly chart, that's where we're at, trying to negotiate that top. There's another top, a major top over here at 1920, if we can move above that top. And there's a 62% level. And on the monthly perspective here, one could say this is all corrective because we've had a double top to a lower bottom. It's coming up for a, you know, this is a rally until it's not. From a monthly perspective, from a weekly perspective, yes, we're in an uptrend. It is overextended. So, you know, do you want to engage a position, a trade when it's so overextended at the moment into, you know, monthly resistance and the 62% retracement? I don't, but when we look at it daily, it's just overextended. Now, a pullback, just a pullback in itself would not change the trend. And I would be using a fib from this low up to that high. And just monitoring the pullback. Can we get a 62 to a 79% pullback for a turnaround to move back up, a continuation trade? All right. Nothing is really telling me too much that we're getting a change up there at the moment. Bit of a pause yesterday. Now, you know, here at the moment, if you want to go short gold, a lower top forming on the day would be great. If you thought that level was the level where it's going to start to hold and get a change in trend. But at the moment, I'd just be waiting for another high bottom to form. You know, if you're looking for a short, look for the 4-hour structure to completely change and show some dominant downtrend on the 4-hour and then structure it that way. At the moment, this is just consolidating up and down, waiting for the news event. So I know it's the lower bottom there. I'm not taking too much information from that because of the news coming out. All right, I'll be monitoring a daily chart pullback for a higher bottom at the moment there. All right, any questions, people? A difficult day. It's been a difficult week waiting for the CPI data coming out. Just going to go back. Aussie yen, whilst early in Asia, it looked maybe it was going to hold at 91 and pop up, but clearly isn't holding. And whilst I'm looking for that 79% level higher up, it may well not be coming around. We may be moving back down already. But if that's the case, we're heading now down towards this monthly level of supports. For me to start to engage now in this pair, I'm going to have to be below monthly support. I don't like this area that we're in, so we'll just have to wait and see where price wants to go when the news comes out. Now, if there's any other pair or instrument you want me to have a review ahead of the CPI data, just put it in there. Or just dropping down to these 15-minute charts and see what's going on. So now this euro yen has had quite a heavy sell-off there. It may well not get back up to the level that I'm watching for a retest, which is 142.55 up to 142.94. Another thing I'll be starting to watch is that range here. Just keep dragging it down. You know, it's having a heavy sell-off at the moment. When the news comes out, it might pop up. Just keep dragging the fib down from that failure up here. That could have been the actual final failure there. Keep dragging the fib down, wherever it might be come CPI data time, because the 79% level overlaps just a little bit short of the 142.55 level. We could see a revisit up there. Hold and fell for a move down, but as I'm talking, it keeps moving down. So I will be monitoring that range tonight, seeing where does a rally come to. Maybe monitoring that range tomorrow. That's if it gives a rally, of course. Cameron, you asked me, would it affect AN? What's AN? Aussie New Zealand. What would affect the Aussie New Zealand? I'm not quite sure of the question. CPI. Well, no, I wouldn't have thought so, because the Aussie dollar and the New Zealand dollar are going to both react the same way. The only thing that's going to affect the Aussie New Zealand is if one of those pairs reacts stronger than the other. So I don't expect the Aussie New Zealand will move too much either way, because it can't go anywhere. If the Aussie moves down, say 1% today, and the New Zealand dollar moves down 1% today, the Aussie New Zealand itself really can't go anywhere, can it? One of them will have to lose or gain more than the other for some directed change to the Aussie New Zealand. I would suspect. We can bring it up. I don't know. I don't really watch the Aussie New Zealand, so I don't know what its direction is at the moment and what the overall bias is from one to the other. Here it is. All right, so obviously the Aussie's the strongest side of the pair at the moment. It looks like it's putting in a high bottom here. Well, that's quite a nice formation. That looks like a new trend for the Aussies forming there. So it's been consolidating all week. It's drawing a fib across that range. It'd be nice to see it have like a 62.79% pullback. Where's the next pullback coming that you could be looking to buy on that pair at the moment? It definitely looks like, from a monthly perspective, This is maybe putting in a significant bottom in there for a move up this way. This looks like a long-term period of consolidation. Let's just squash this in. All right, so we're definitely, you know, for the last 20 years, what is it, 20, in fact, nearly 30 years, this is obviously the low end of the pricing of the Aussie to New Zealand. So this looks like a long-term consolidation. That looks like a kind of a breakout, pullback, and we could well be seeing a movement up. Of course, it could stay in consolidation if it really wants to. You know, it really needs to clearly break this sort of area to move up long term, but it does look like it's putting in a nice high bottom there. Edwin, you asked me, does the movement of gold affect the pound yen? Not that I know of. Tends to, well, I mean, what you could do is you'd have to contrast one chart versus the other. Gold has been over the last 12 months for sure, been following what the pairs to the dollar has been doing. So the pair, when the pairs to the dollar have been moving down, gold was moving down. Gold's been moving up quite aggressively recently, a bit more aggressively maybe than the pairs to the US dollar. But in terms of the pound yen, I would say, you know, if the pound dollar's heavily selling off, then generally the pound yen will, in all probability, heavily sell off. And if the pound dollar is heavily selling off because of a US dollar strength, gold's probably moving down. So that might be the correlation. But what you'd need to do, in all probability, and we can have a quick look now, you know, you need to look at gold. Say from the weekly or the monthly perspective, look at the significant highs and lows of gold, and then look at the, let's just get a new chart up of pound yen. Is contrast the major turning points on the pound yen. Do they correlate with the major turning points of gold? And so this is the monthly chart, and you know, we could look at that top, which was back in June 15. It doesn't look like it correlates because June 15, gold's heading down. Gold's heading down during 15 when pound yen was moving up. Let's have a look at the next major bottom. This is October 16. I'm not seeing a definite correlation there at all. Are you? I don't think so. I mean, all right, so you're telling me you notice that what I'm seeing, if anything, is the opposite correlation. So like you're saying, when gold goes up, the pound yen goes down. All right. Because what we are seeing is, you know, through the period that we've been seeing gold go up here, what we've been seeing on the dollar yen is that the dollar yen has been going down. So what we're saying there is as gold is strengthening, the yen is getting stronger too. When we're looking at a pair to the yen, gold's going up, pairs to the yen are moving down. So that means that the currency on the left hand side is weakening versus the yen, as gold is going up. All right. But I don't know if there's a high correlation that you can, you know, trade from one day to the next. You look at gold and say, well, what's that doing today? And then you look at your pound yen and go, okay, if that's going up, this must be going down. You'd have to do the work on it. I've never looked at it that way, so you'd have to do the work yourself. But if you start to see a correlation that definitely works, then for sure, add it to your arsenal. All right, so as we're heading towards the CPI at the moment, we're definitely seeing yen crosses moving down. The Aussie yen, now that it's broke 91 today, it was trying to hold some support there through Asia, but now it's broken. So these yen pairs may have topped out, and they may just continue their way down when the CPI data comes out. So I don't know if anybody has got short these yen pairs already, but Aussie yen didn't quite get to the 79, if that is the final top. The Euro yen, it actually almost created a double top here. It's back below the 79. Pound yen, still heading down as we've been doing the webinar. It looks like, yes, it's been topping out at the 79 to move down. Of course, when the CPI data comes out, it could be totally the opposite story. But if we just rule out the news coming out later on, and all these yen pairs are looking like they're failing at the 79% areas. New Zealand yen, that's doing the same thing. All right, now the New Zealand yen's had a nice drop. Any rally back up to this resistance level over the next couple of trading days would be a good level to watch. And the dollar yen's heading down. So now I'm actually going to be watching this tonight. The dollar yen, does this area hold? This is a, you know, if I can get a reasonably tight entry at 130, close to 130.40, this is a major level of support held there last week. For the last 3 weeks, we've been holding there. We dived underneath last week, but finished positive. So that is showing a little bit of support there. This could be where the low of the year comes in. You know, if we have another stab at 130.40 and hold for a move up to maybe come up and challenge the high of the year for last year. So if you can get a reasonable entry down here, it's worth the risk to reward. There's 2,000 pips all the way up to the top up there. It's just how you can construct it well once the news is finished doing its thing. So as I've been saying on this dollar yen, there's still this imbalance here that needs potentially to be filled. All right, and on the daily chart, there is a very large imbalance over here. So there's a, you know, that imbalance there. If we get support down here and we really do start to change this trend here, which is keep flip-flopping around at the moment, it's been downtrend, uptrend, higher top, higher bottom. Now it's maybe changing back to down, or at least range bound. There is a large imbalance up here that the market may want to come up and fill this year. So if structure starts to dictate an uptrend here, you know, a good target would be, where's that top of the imbalance there, at 145.13. So that's a good, you know, 1,500 pips away, isn't it? All right, well, that's a long way, obviously a long way away, but that would be a good target though if we did just start to get support here. If you wanted to hold a trade, we'll just have to wait and see whether that can start to eventuate. So I'm going to watch that tonight. What happens down here at 130.40? At the moment, it's just heading straight towards it. So we may just blow straight through it. We may have a, you know, just because we trade down through it today, as we get into next week's trading, it does not mean that we will still be below it. All right, the market may have a 24-hour, 40-hour reaction to whatever the news is. And then, because don't forget, even if inflation ticks down a bit, the Fed's still going to raise interest rates. And when we're looking at the dollar yen, the interest rate differential definitely favors the dollar yen. So from a carry trade perspective, it favors buying dollar, selling yen. So even if we have 2 good days down through that level, we could be back above 130.40 next week. And if we do start to do that again, you know, the interest rate carry favors dollar yen moving up, you know, at some point. So it's just a question of what, you know, when does that turn around? All right, so those are levels I'm watching, depending on where you are in the world. For me tonight, CPI data is at 11:30 Queensland time. New South Wales is 12:30, which is a little bit harder. If you're in the Europe area, it's a little bit easier. For some of you that I think are in the UK, it's a lot easier. Or any final questions? Slav, what you're asking me here. If we expect a reversal, then euro yen or other pairs to yen are potentially more profitable to trade than the dollar yen. When you say a reversal to the downside or a reversal to the upside? All right, say market reversal, but like when I'm looking at the euro yen market, we were saying US dollar getting stronger. Well, if the US dollar gets stronger, there's always the potential that the US dollar gets stronger, then the dollar yen theoretically will go up. The euro dollar will go down. So let's just talk about the euro yen. So dollar yen will go up, euro dollar will go down. Euro yen could then stay sideways, because then it becomes a question of is the dollar going up stronger than the euro dollar moving down? You know, if dollar yen moves up stronger, then the euro dollar is moving down, the euro yen will go up, and vice versa. Now, if the dollar yen's moving up at a rate that's very similar to the euro dollar moving down, the euro yen will be sideways. So if we see a very strong trend going up on the dollar yen, a strong trend going down on the euro dollar, the euro yen then potentially gets stuck in a sideways pattern. So we'll have to wait and see how exactly it all goes out. So you're saying euro has been stronger recently, US dollar weaker, then all reverses. So there is, of course, the fact that the euro is being very strong. If the data comes out very US dollar strong, this may well have the heaviest sell-off, because traders have been obviously taking a bet that they're buying the euro dollar thinking that this is the one to be long on. And then if the news comes out and it's very US dollar positive, you're going to find a lot of weak bought positions wanting to get out of those positions. So we may well then see more movement down the euro dollar, because people are wanting to cover their long positions with the bets that they've been making. Okay, so we'll just have to wait and see. In a sense, you're saying, you're asking me, is the DXY drop from 114,700 high an impulse or corrective? Well, let's have a look. If we ever look at the monthly chart, this is, in my mind, impulsive, because it's going up to a high, breaking out of this large consolidation period. So this, in my mind, at the moment is corrective. So what should happen if that's impulsive and this is corrective? At some point, we should see a movement that's going to go up and take out that top. All right, so when we're looking at this price action, there's a bit of ambiguity, because when we look at a bigger period of time, there's some ambiguity to it. Is, first of all, we have this range that we've broken out. So in a perfect world, what you'd like to see is the top of the range become support, but we don't quite get that. So there is, there is the possibility that this wants to have a deeper pullback to at least a 62% retracement. but we'll see whether this support can hold. But when you look at price action in terms of what we've got here in the chart at the moment, that upward move is impulsive. This is a corrective of nature. And then another impulse would come in play. However, when we take in a larger piece of data, so if I squash this in, there's a significant high area up here and a low area down here. And if you draw a fib across the whole range, we're failing at the 79% level. So when I'm looking at the major movements over the last approximately 25 years. Now, I don't have any data, so I don't know what this low is here relative to what's to the left here. But if I'm assuming this is a lower area and that's a higher area, that could be impulsive down from a major perspective. This whole movement this way could be corrective, and we could get a major impulsive move that way. But I don't have sufficient data to confirm that structure. But as well as I've squashed this in, what I am seeing if you want to do like a long-term kind of structure analysis, what I see here is that we have this period of consolidation here, which became, all right, this period of consolidation here, which then had an impulsive move up. So what I'm going to do, just to prove the point, I want to put in the exact level there. Is that exact high there. See how price, so we have this impulsive move up, then we have this pullback. See how price didn't hold on support, it was kind of underneath for a while. So we might have the same kind of price action here. So that movement up there, pullback, consolidation, then we've had that upward movement there. Be interesting to know that length of pullback here. Yeah, we could go deeper. If we get a similar pullback to that, then we could get down to there. What I can see though, because price action kind of does the same thing all the time. This impulsive, this corrective phase down through here. See how we came out and put in this lower top here. We really haven't done that. We've had no movement up yet to put any form of lower top in. So we are due a rally to at least put in a lower top if it wants to. But I still feel like this is impulsive, this is corrective, and we could get another impulse move at some point. So we've gone consolidation, breakout, consolidation, breakout. We could come down, consolidate, and then break out once more, or we could just come down and move back up. So you can see some definite similar phases there. Now we could, like it did here, came down, rallied, came down, and then broke out. We could come down and then come up. Like so. So, you know, you can definitely see some repeating patterns there over time. Of course, it takes a lot of time. Some of these consolidation phases have been the best part of 4 or 5 years. So it's very difficult to, at the moment, determine long term what kind of phase we're going to get back to the upside, but we'll just have to wait and see. All right, hopefully that helps, or at least it was a good lesson of looking back in time of what structure unfolded last time. Will the same sort of structure unfold again? All right. Thanks, everybody. Now, next week, we have analysis on Tuesday from the webinars. So we'll obviously know what happened from the CPI data perspective by then. So that's on Tuesday. Next Wednesday, going to go through high probability trading levels using the monthly and weekly candlestick highs and lows, and then more analysis next Thursday. So everybody, safe trading. Make sure you're managing your risk after the event if you're wanting to trade tonight. Of course, you need to be managing risk all the time, but we'll be very volatile tonight. So don't have the fear of missing out and do something silly. There'll be plenty of time to, if a new trend unfolds one way or the other, following the CPI data tonight, there'll be plenty of time to get on board next week. Don't do something silly with the fear of missing out. Look for a setup that you like, and then off you go. All right, everybody, have a great trading week for the rest of the week. Have a great weekend. I look forward to seeing you next week. Thanks, everybody.